Hi, Jonathan York here from IRG BOP. While the warehouse isn't the only income option available at present, obviously we have the latest warehouse bond in the marketplace. It's a 5-year senior unsubordinated bond, good rate, but there are lots of other alternatives out there which seem to have been overlooked as people clamour for the latest cab off the rank. If you look at some of the shares, you still got Telecom, which is offering a very good dividend yield, and even if you saw a 20% reduction in the current dividend paid by Telecom, that would still be yielding over 9% on a gross return. Also got Vector, which is currently just under 10% on the dividend yield, and these stocks represent some pretty good value and some pretty good income generating opportunities for the portfolio. And shouldn't be dismissed just as the latest bond offering comes through. So they are certainly worthwhile looking at as well. There are still the preference shares out there. We are expecting to see details of the latest offering coming through from Kiwi Bank on the preference share. We've got ANZ, BNZ on the sort of 5-year resets, Credit Agricole on a 5-year reset as well. On the 1-year resets, which probably represents some slightly better value currently, you've got the CBA, you've got Bravo, and you've got Origin Energy. They will all offer good opportunities for income generating assets, and there is some potential as well, given the discount they're currently trading at, to see some capital pickup as the interest rate cycle starts to increase, as is forecast for the second half of this year. There are still the property trusts out there. They are currently yielding anywhere between sort of 7.5 to 8.5% on a running dividend yield. There are some potential issues with some changes in the tax regime, but they haven't been outlined yet, possibly coming through in the budget. But even so, we still anticipate a pretty good running yield from these property trusts. If you compare with the banks at the present, you're getting maybe 4.5–5% on a 1-year term deposit. For a property trust, you're running at sort of 7.5–8. So there's a considerable pickup there, with potential as well for some capital gains as well going forward. Seen the Auckland City bond, that was 6.28. The yield on that was a 5-year AA rated bond, but that's only available now in the secondary market, and I suspect there will be still a little bit of demand for that, even though the yield is a little bit on the low side. For 5-year money, 6.28, some people may sort of like to lock that in. Last few days for the OMIP Eclipse 2010. That is the growth asset from Man, international managers which access over 120 different trading markets. It is pure growth, and there are some tax advantages as well, depending on your offshore holdings. If you're under the 50,000, then there are some potential advantages for holding those investments. So if you are interested in that, give us a call on 0800 867 323. Call on 0800 867 323. Risk statement available on request, or you can go to the website www.irgbop.co.nz. Lots of interesting articles. There's a warehouse application on there as well, and we look forward to speaking to you soon. Thank you.